But we know that stability is the name of the game when it comes to Beijing, at least this year in particular. Does this sort of development give you more comfort that there will be a soft landing, a ring fence situation for property, or does that remain a major risk?
Well, I think there's still evidence of a bit of a shakeout in the property sector coming through, and that obviously does present a risk for investors and the sentiment towards China as a whole for investors. I think, though, what you are seeing, as you mentioned, is stability being the key function of how we do see the economy playing out for China this year. If 2021 was all about policy normalization across fiscal and monetary policy, as well as changes on the regulatory and industrial policy side to certain sectors to achieve those long-run goals, this year is going to be much more around the sort of marginal changes that trying to lead to that stability, whether it's through a little bit more fiscal spend, whether it's through a little bit more monetary policies stimulus and those rate cuts to RRR or interest rates, or it's around the providing the stability to these sectors, such as we're seeing with this current piece of news. I think that's going to add to the sentiment towards China. And after such a poor performance last year, there is a question around whether China will be a bit of a bounce back market for investors this year. Certainly attractive from a valuation standpoint, and certainly attractive when we think about the long run potential and the number of investors who have simply been waiting to get back into China as some of these issues start to clear. The near term, again, clouded a little bit by the Omicron variant and the policy response to that. So I think it's still a case of watching and waiting to see what happens with China over the course of this quarter.
Exactly. So I'm wondering how much of all of the positives that you've just listed will be offset by the fact that Beijing keeps insisting on a COVID-0 strategy.
That is a big unknown about whether that is entirely possible, given the high transmission effect with this variant, and whether they will be able to contain it. And I think that the extent to that limits growth will be really what's the focus. I mean, China's officials still have this focus of growth around that 6% number, and it will be difficult to achieve that if they do have these very severe restrictions in place. And again, it will lead to that sort of playing out of whether the surge in the virus is actually short-lived, as it has been in other markets, and starts to top out really quickly, or it becomes rather prolonged. And so that's, again, why I think it's a case of watching the next few months in China to see what happens. But again, I think there will be plenty of opportunity over the course of this year as some of these fears around the Omicron variant do start to fade out over the next quarter or two when it comes to China and Asian markets more broadly.
What opportunities do you see coming from Chinese stimulus, which you've highlighted as thematically one of the key things that you're watching?
So we've seen some measures taking place on the monetary policy side with small interest rate cuts and obviously RRR rate cuts. I think last year, if we look at the spending that happened at the local government level, if we look at the stimulus on issuance of bonds, it didn't quite live up to the expectations of what was planned. So we're likely to see further measures come through there, especially if we think about the revenue that's generated from land sales for local governments. If there is concerns around the property sector, that may be offset a bit more by the government spending. And also the implications for the household sector. If there's unemployment created by the fallout from property, there's going to be need to create new jobs, or at least try and provide incomes for those people that have been made unemployed, to keep that domestic consumption quite elevated as they do shift towards an economy that's much more fueled on domestic consumption rather than external means of growth through trade. So I think those are the measures we'll see come through as they try to keep that economy on track, and that's how the spending will be focused. I think that also plays through into how we would approach the market from a much more domestic angle, rather than thinking about the external parts of the Chinese sector.